Hey, okay. Oh my God. Hey, what is up, everybody? Just rolled in the door, just getting things set up here. For those of you joining us on the replay, happy to have you. I'm going to talk about 12 dividend stocks that have a super safe dividend safety score according to Simply Safe Dividends, and they are at 52-week lows. You can hear my phone going here, so apologize for that. And for those of you watching live at home in the comfort of your home or your car, or if you're, weed whacking, if you're up in the attic doing some blowing insulation or something, if you're in a rest stop, maybe you're having an extended stay in one of the restrooms and you're watching me on the live stream here, happy to be with you and spend a little bit of time with you. So, yes, thank you. And without further ado, just looking at myself here. Anyway, we're going to get into it. These stocks. So I want to preface this by saying, as a dividend growth investor, I love it because the market is going down. It's a bear market. It's here. Don't know how long it'll be. Don't know if it's going to be an extended stay, but it's here and it's giving us wonderful opportunities. So don't take any of this as gospel. Don't take any of these as you must buy. These are just ideas and suggestions here from me, from Russ, here at Dapper Dividends Incorporated, where we're going to give you some ideas and you need to do your own due diligence, do your own research, and check if they are right for your portfolio. Wherever you are on your journey, I don't know. I'm not psychic. If I knew where each of you were on the journey, that would be crazy, and that would be a whole different channel, one to behold and love. So without further ado, this guy's going to stop yapping with this intro. We're going to get into it. So here we go. I'll acknowledge all of your presence here when I'm done with it because I want to keep it for the people watching on replay. We're here anyway. All right, let me share my screen with you. I know it's real professional here. We're real professional here in Dapper Dividend land. And here we go, buddy. Here we go, baby. Are you ready? I wish I had some traveling music because that would be incredible and just wonderful. And we want to go here to the old Simply Safe Dividends. All right, let me make this screen bigger. That work? All right, there we go. We just enlarged the screen. This is the kind of hard-hitting analysis you get here, baby. That's what you get. All right. So we'll touch on this in just a second. But first up, here we go. Are you ready? Are you ready for number one? You can see me typing it in here. I love it. Church and Dwight. Again, these all have a dividend safety score of 99. Real quick, there's 12 of them. We're going to go through super fast, not really going to get into too many of the metrics, but the first one is the consumer staple product, Church and Dwight. I do believe they have Trojan, I think is one of their brands, Arm & Hammer and Trojan brand. There we go. Trojans and stain removers. How nice of them. Somebody had some forethought there in the war room over at Church and Dwight because they're like, we got Trojans. Let's also make stain remover part of our bourgeois of products. So Church and Dwight, dividend safety score of 99, currently at 1.47% yield. They are a super safe company. Swan, these are all Swan stocks, sleep well at night. Not terribly fast dividend growth recently, but dude, 121 years of dividend growth for Church and Dwight, 16% 20-year CAGR, 25-year growth streak. They are a dividend aristocrat. Up in there is Church and Dwight. And I hope you all can see this very well on the live stream. I think so. I got my phone there. So Church and Dwight, you can see their payout here. You know what? How about this? Those of you that are watching on the replay, I'm going to kind of just scroll through here quick. And if you see something you like, just pause the video and you can study it a little more instead of me yapping on about it. Also pay attention to the next ex-dividend date if you want to get in here. And then this is where we're going to stop, is the timeliness. Is what I'm going to show all you all out there in YouTube land. Yeah. So forward PE ratio is well below. Dividend yield is 19% above the 5-year average. And we see they are buried. These are all 52-week price lows. So you'll see right there. Next up, as we go back to the top, that was Church and Dwight. As I look at my notes here, my little cheat sheet, Nike. Everybody knows Nike. I hope I don't have to explain to you who Nike is and what Nike does, because if I do, you shouldn't be investing. Okay, I can hear. I wanted to make sure we're good here on the sound. We're good. Nike, 99. Again, feel free to pause the video on the replay here if you want to see any of this stuff in more detail. Dividend growth, 16% 20-year CAGR, solid. Last raised their dividend 11% in November of 2021, and they are due here. Should be announcing this month, I would think, for their next dividend increase. Could be 10%. We're going to get a feel. We'll see how management is, how confident they are, but they do have a low payout ratio. Their ex-dividend is passed, and the timeliness on them. Dividend yield 46%. It's only 1.47%, but that's 46% above the 5-year average. Wonderful book I read on Nike, and I have a few cobwebs in the old noggin here because I was out last night late, starting sober October today. Cobwebs in the head, kind of good because it's like that free space on the bingo card. The first day of sober October is usually the easiest. And anyway, won't get into that. So the 52-week low, obviously low, and their PE is still a little bit high, 22.8. But for them, they are far below. And next we're going with a company that I just bought, Procter Gamble. 99 safety score, 2.89% yield. Their price, $126. I bought it at $127.50. That was the first time in like 561 days that I bought Procter and Gamble. You know who Procter and Gamble is, my God. Just look in your bathroom and just, don't even tell your wife or your girlfriend or whoever, or if you're single, just get your cat and go in the bathroom, lock the door, put on some nice music, maybe a couple candles, and see how many Procter & Gamble products you have. 5% dividend growth last April. They don't grow it terribly fast, 20-year CAGR of 8%. Check that out, buddy boy. 132 years of dividend growth streak. That gets a chair spin for 132 years of dividend growth. That's a new thing we're incorporating here on the channel is we'll do chair spins and hopefully it'll stop the room spins. 66 years of dividend growth streak for Procter and Gamble, and payment detail you want to see. There you go. Ex-dividend was July 21st, so it's going to be a minute here before their next one. And then their timeliness, 13% dividend yield is above the 5-year average. 2.89%. I love it. Such a safe company pushing 3%. 5-year PE. The forward PE is below the 5-year average of 23.5. So currently paying $21.30 for every $1 of Procter and Gamble's earnings is what you're doing there. Okay, moving along, singing a song. Who likes chicken? I like chicken. I just started eating meat again after going 60 days of seeing what the whole hubbub and ballyhoo is about, not eating meat. Dividend safety score of 99. I had a chicken burrito yesterday from Trace Hermanos in Lakeview East. I think we were in. Again, very nice. Dividend safety score of 99. People are like, what in the world is on with this guy? He's nuts. Yeah, that's the point. You're still watching, aren't you? 99, 2.79% yield. It looks to me like they're going to have to be raising that dividend soon. Why? Well, last increase was November of 21. We're coming up on that. 13% 20-year CAGR, 24% 5-year CAGR, 9-year dividend growth streak. When they hit 10, they become a dividend achiever. So we'd like to see that. Hopefully they're going to hit it here. Let's see what's going on. Yeah, so we see here 2, 3, 4. They were due for a raise recently. I don't know why that shows December. Is that this December? I think they're still paying it. I didn't really look past the safety score of 99. So that's kind of interesting here. It looks like this is going to be, December of 2022. So it's already been announced it's not a raise. Now they do, I believe, have a few more quarters before they would lose their qualification of dividend increases. So something to keep an eye on here. Again, not recommendations, throwing some ideas at you here, but their dividend yield of 2.79% is 30% above their 5-year average. 52-week low. I probably don't need to say that anymore. Dude, their PE is 9.1, paying $9.10 for every $1 of Tyson's earnings. Here we go up. Coming up next, hot and fast, coming in fast, UGI Corp, gas utility company. Again, dividend safety score high, dividend yield of 4.45%. Now, utilities, I like them because it's basically like they have guaranteed profit streams coming in when they are regulated. Yeah, they can't just go hog wild and raise it, but their prices. But because the government regulates them, it helps to keep competition out. So this is why they get a dividend safety score of 99. 4.3% growth in May of 22. So that was a little bit slower than what they normally do. 7% 20-year CAGR. And dude, we're going to go the other way here because why? 137 years of uninterrupted dividends. Ooh, lost a little bit of momentum on that one. But yeah, 137 years of uninterrupted dividends, dude, that's solid. You can just bank it. 34-year dividend growth streak as they're headed toward being a dividend king. We'll see if they make it. Their payment details here. Ex-dividend just passed a few weeks ago, paying $1.44 per share. Again, just pause the video, watch this on replay if you want to, study any of these a little bit in aggregate better. Dividend yield, again, 49% above the 5-year average. I like to see that. The current sector PE, they're way below at 10.2 and obviously below their own 5-year average. So that was UGI. This one, a lot of all y'all like Visa, ticker V, only a 0.84% yield. I'd love to see Visa at that 1%. It's so very exciting if they get up to 1%. Well, look at their dividend growth, though. This is the thing to pay attention with some of these companies. They have sorry, my cat just distracted me here. Mr. Poop. All right, you can't hear him. He might come up and join us. We'll see. If he comes by, I'll snatch him. Where were we? Oh, dividend growth, 17%. Oh, his name's not Mr. Poop. His name's Louie, but he's going the other way. Maybe another time. Anyway, back to Visa. Yeah, they have a low paying dividend, but look at that growth. 19% 10-year CAGR. That's huge. So yeah, I know a lot of people, and I'd love to hash this out, and we can chop it up in the comments. I'm going to write down Visa. I want to know what you guys think about investing in companies that have a itty bitty teeny tiny small starting dividend yield, but they increase it like big up increase, like Big John stud increases. More on that later. Let's see here in the payment details. They are due for another raise. Check that out, which was October 21. So really quickly here, they should be announcing another increase, currently $1.50. And yes, because you asked, they are at a 52-week low. $177. They had been as high as $235. But check that out. Yeah, it's 0.84%, but that's 33% above the 5-year average. All right, let's go through these a little bit faster because this is getting long in the tooth. Yeah. Medtronic, dividend safety score. Why am I keep saying that? Okay. 3.37% yield. Again, you can pause these. We're going to go through them rapid fire. 7.9%, 13% 20-year CAGR, 44 years of dividend growth. There's your payment details and the timeliness. That yield, though, check that out for Medtronic. Dude, they invented the pacemaker, did Medtronic. Their dividend yield is currently 54% above the 5-year average, and it's at 3.37%, all the way down at $80 a share. I like it. I like you, Medtronic. You're my friend, Medtronic. All right, here we go. If I can spell this, ORCL. Boom. Look at that, ORCL. Dividend yield, 2.10%. Slow growth, 0% is very slow. So March of 21, So they are due for one. I don't even know why they put that up there. I'm sure they grew it. Let's see. Don't hit the X. Oh, yeah, look at that. Oracle. So this is interesting. 9-year dividend growth streak on the line. Dude, 1, 2, 3, 4, 5, 6, 7. Yeah, they're going to have to increase this thing quick. And wow, they may be losing their dividend growth streak. So interesting, though, that it's a safety score of 99. But remember, that's the paying a dividend, and the likelihood of a cut is very, very small. So that doesn't really factor into the growth. It's just the likelihood of a dividend cut. Keep in mind, because some of the companies on here don't grow it very quickly or at all. Currently yield 29% above the 5-year average for Oracle, popular tech stock in the systems software space. We got 4 more here. Real quick. Another small, Mastercard, small dividend yield, 0.69%, 41% 10-year CAGR. Man, that is just massive. 11%, 15-year uninterrupted growth, a streak for Mastercard. Dude, do you have credit card debt? Are you a deadbeat credit card holder? If you don't know what that means, those are people like me that just had a hotel stay in Chicago, completely paid for with points. Our credit card is like an extension of the checking account, so we never carry a balance. We never pay any interest. We pay it off in full. I'm a bit of a lunatic. My wife says I have OCD because I try to pay it off multiple times a week. But hey, we all have our picadillos here in life. And yes, October 6th, check that out. Breaking news, everybody. Breaking news. October 6th is their next ex-dividend payment, and they should be increasing it here soon, which last was December 2021 was 11%. So they should be increasing that soon. And their yield is 32% above their 5-year average. But remember, they have really quick dividend growth. All right, here we go. All right, come on now. Couple more. Bear with it here. Honeywell, 2.47% yield. The industrial conglomerate, 5% last increased October of 2022, which was just now. A little bit of news. They increased their dividend. Maybe we'll share that later in the channel after these replay people want to get out of here. Payment details. Their ex-dividend is November 9th. That new dividend goes into effect, $1.03 per quarter, $4.12 per year. Timeliness. Check that out. Their yield for Honeywell, 23% above the 5-year average. And I do believe they have one of the fastest quantum computers. It's kind of like, I won't say it. Like, measuring the size of Mr. Johnson. They keep like one-upping each other. IBM and Honeywell do, from what I understand. And that's Honeywell in a nutshell, 23% dividend yield. What did Austin? I won't do it. This is me in a nutshell. Help. Anyway. All right. I have an interesting thought about A.O. Smith here, which is our next one. I think that a lot of the home builders, because we're going to be, instead of looking to move, we have a super low mortgage rate at 2.25%. It's almost 7% now. So I think a lot of people are going to be upgrading their houses. I think this is good for a company like A.O. Smith, which does water heaters pretty much. And let's see their dividend growth, 22% 10-year CAGR. They did have a cut during the last recession, something to keep in mind. Oh, no, they spun something off. Never mind. Belay my last. That's what we say in the Navy, because it shows 28-year dividend growth streak. So I'm flapping and yapping too quickly. It'll look like a cut. And Philip Morris, and Abbott showed like it looks like a cut, but they spun off a big chunk of their business. So I'd be curious, do you know what A.O. Smith spun off? Because they have 28 years of uninterrupted dividends. There it is. They're getting ready for another increase here. So if you want to get in, get on in. Their yield is 31% above the 5-year average. And our last one, last but not least, thank you for hanging in there and being patient. You're like the kids with the marshmallows. You're going to get, I don't know, not a reward. So, it's got a 98. Yeah, I like BlackRock. This is a company I'd love to get into. So I saved it for last because technically I guess I lied to you. They're not all 99. It's a 98. So sue me. No, don't sue me. Please don't sue me. I'm a limited LLC. All right, 3.55% yield. It's close enough. It's huge, dude. Look at 18% they last raised in January, 12% 10-year CAGR, 12-year growth streak. BlackRock currently paying $19.52 a share. And some of you out there are like, oh my God, almost $20 a year per share. I got to get up in some of that. BlackRock right there. Once you go BlackRock, you never go back, they say, I think. And look at that. Dividend yield, 37% above their 5-year average. And they are currently $550 a share. Now you might say, like, why are they so expensive? Well, this is the only thing I'm going to show you as we go down to their shares outstanding. Blow that up for you in case you don't have your bifocalers on. Look at that. They have 154 million shares outstanding, so not a lot of shares outstanding. And with that being said, always look and consider how many shares are outstanding. And we're done. So what did you think? What of those companies do you like? I'm back on you. Now I can acknowledge all of you people here with what you've been saying. And dude, I'm going to go right to my guy first here. All right. Mr. Freedom Stacker, this guy, I don't know why you keep doing this. And do you know what? I don't know your name offhand. Please share your name. I can't believe I haven't asked. He has a YouTube channel, does coins and money and not like cherry picking, but sharing what he's doing with coins and buying coins and things. Hey, look at this. I'm going to drink from my flamingo glass. Flamingo. Como se dice flamingo en español? How do you say flamingo in Spanish? I don't know. But anyway, yeah. Check out the Freedom Stacker channel. Thank you, dude. Invest in yourself. Like, all I ask from you people is just to watch my videos. Just click. I get a little bit of ad revenue. This is like a hobby for me, and I don't have any intentions of being a full-time YouTuber yet. Maybe someday. But this is just a part of my journey, and I really do enjoy this right here. I like talking with you guys. I love talking with the other creators, like Darth was on, and yeah, why do I got a little connection's fairly good. I hope I'm good here and not lagging because anyway, I just saw something pop up. All right, let me acknowledge all these. Again, thank you, Freedom Stacker. So Steve wants more consistent time. So here's the thing. Here's the sitch. Here's the deal with what's going on. Yesterday, crazy day. I just came home, literally threw a thumbnail together. Like, it's super quick and jumped on. I came home not even an hour ago. I was in Chicago. Dude, we set the Guinness Book of World Record for the largest pizza party outside of Wrigley. Yesterday, we went to see the Cubs play the Cincinnati Reds, which they beat 2-1. And we were part of the world's largest pizza party. Guinness was there, not the drink. I wish it was Guinness, but it was for Home Run In Pizza, which is a Chicago. Did you hear that? Chicago. That's my accent you hear. I can go out Blues Brothers and try and talk like really Chicago if you really want me to, and the Bears. Anyway, lost my train of thought. Said cobwebs in the head. We set the world's record for largest pizza party. We saw the Cubs. We walked to a pop-up Stranger Things pop-up bar in Lincoln Park called Replay. If you're in Chicago, got to check out Replay. All the video games are free. They have pinball games, video games. Super cool place. Got that burrito. Then we went to our hotel and saw not at the hotel. We went to the hotel to check in and then walked to the House of Blues, saw Me First and the Gimme Gimmes. They're a punk cover band. All cover songs from John Denver to Dolly Parton to show tunes, and I love them. They're a really cool band. And then we went to a reunion dance party for a club called 950. They play like goth, dark wave, electro, just cool stuff. So got to bed about 3 a.m. Papa here had a few too many drinks, but hey, that's That's great. Anyway, so that's why, Steve, I wasn't sure what time I was getting home. And here, I'm going to go through these fast. I want to talk to you guys more live. Yes, Trojan and their stain removers. You know, when you're dealing with things of that nature, you got to have dude, there's Shamir. Shamir is in Canada. How many other Canadian Canucks are out there? Is that offensive if I call you a Canuck up there in the Great White North? You guys are too nice. I like it. You're too nice. Let's see. Dude, talk about somebody just in Chicago. Zal Daff was in Chicago. Interesting name, dude. I don't know what that's all about. I love it. Blah, blah, 10 minutes. Yeah, you can all watch us on the replay. Obviously, you know. Here we go. Cool. Share your ideas, whatever you want to talk about. Let me know if you want to look something up on the old Simply Safe dividends. Pop your question on in there. I'm going to try and run through these comments, get caught up. Kevin Mendoza, what's up, buddy? He's going to buy a lot of AT&T. That's another one at a 52-week low. But, oh, man, AT&T, that share price is just not coming up. But look at Verizon. Verizon is way down too. With these companies, we're buying them for those stupidly high yields. I think they're both probably over around 6%, right? Oh, holy cow. We're not buying them for growth. No. We're buying these companies for their dividend. That's what we're buying them for. Don't expect a lot of capital appreciation. Someday, I'm hoping AT&T gets back to the high 30s. We shall see. And yeah, interesting pick there. All right, let me see here. Look for more relevant ones. What in the hell is that name, dude? Das Kapital Sten Schweinchen. Das Kapital ist ein Schweinchen. Ja, we're buying these dividend stocks. Dude, I'm sorry. If you're German, that may have been, I don't know. If it was offensive, always know that my offensiveness comes from a place of love, well-being, and respect. Dude, dance like nobody's watching, but I'm watching and judging. So always keep that in mind. And yeah, he says Medtronic is quite nice. And problems with the tax here in Germany. Oh, he is from Germany. Oh, yeah. I don't know how to. Dude, I love Germany. I love Rammstein. We just saw Rammstein in Soldier Field. I see my son down there again. Hey, bring him over here. Oh, come on. My teenage daughters, they're shy. Dude, that's interesting. Medtronic, yeah. And I'm not sure about the tax over there in Germany. Hey, my assistant. No, watch out. Put him over here. Oh, here we go. Look, we caught him. We got him. This be my son here, Louis. And he's very nice. Let me show you this. Very nice species. Okay. Let him go. We return him back into his natural habitat. My daughters will never come on this. It's embarrassing. It's embarrassing. No, I look like a mess right now. People can hear you. Anyway, all right, let's get to these comments. That was my son, Louis. Call him Mr. Poop. And my family doesn't know why. I don't either. It's stuck, and I do it. How many shares? Oh, they're okay. They're talking. What are you guys buying? You guys are talking. Here we go. Harris. Dude, Harris Malberg just started a podcast. Put your podcast in the description so I can say it. I don't remember what it's called. Something with, I don't want to say. Put it in there. Yeah, pays his credit card off daily. Dude, so you're not the only one. I love it. That's the best way. It's such a cheat code. Screw Dave Ramsey tells you to cut up the credit cards and not use it. Maybe if you have problems with credit and you can't do what we do, like I'm telling my daughters, they have debit cards and they were like, wait, so what's a credit card? I was like, well, ours has up to $30,000. I could just go buy stuff right. And they're like, whoa. I'm like, yeah, no, you're going to get charged a ton. I started explaining it to him. I said, all you need to do is we treat our credit card like a debit card. As long as you always do that, you will be fine. Our credit card is just an extension of the checking account. And here's my German friend again. What's your name, buddy? I don't know what that means. Something about capitalism, maybe. I don't know. ASML, nice. BlackRock. Yeah, SWK, they're good. Oh, dude, look at this. Deadbeat credit card holders unite. I will drink to that, non-alcoholic. These are Mayo drops, Mayo, however you want to say it, brought to you by Kraft Heinz, ticker KHC. Anyway, all right, what do you guys, you want me to look up something? Let's see. Here we go. Zal was just in Chicago. Oh, now he's going to, dude, this guy's a globetrotter. All right, here we got A.O. Smith, nice as well. I'm out here describing my portfolio. Let's see. Limited LLC. Yeah. PIN number at the ATM machine. I do when I use it. I don't really use it that much, but yeah, I 100% do. All right, what else we got? Let's hear some more ideas for you guys coming at you from Patrick. He's looking at Visa, Microsoft, Google, BlackRock, AT&T, Nike, Parker Hannifin, Meta, Disney, Texas Instruments, I assume that is, Intel, and Stryker buys for Tuesday. Solid, man. Thank you for sharing that. And out of those, I am buying more Texas Instruments. Love Texas Instruments, solid company. And yeah, oh, dude, that shows you how out of touch I am right now. Flamingo is the same in Spanish because it's probably a Spanish word. Flamenco, yes. Sí, la palabra para flamingo es flamenco. The word for flamingo is flamingo, I just said. Here he is. Always there. Thanks for content. Oh, by the way, you're welcome, Clown. And speaking of, you got to check this out. I just did a poll yesterday before we went on our little, pre-sober October excursion into Chicago. I put a poll out and I listed some of the stocks there at 52-week lows. And Kate, we call her KC, had a really amazing and incredibly detailed and researched comment on there. So I would highly recommend looking in my community tab. And if I remember, I'll put a link to it down here. I'm sure I could do it in here, but all right, I want to get caught up to you guys. Here we go. To your music, to música. Thanks for the dividend info. Just saw a band yesterday from Mexico called the Black Tones. Dude, they had a giant xylophone. A bunch of Mexican dudes were crazy, shirtless. It was an experience. I love it. Let's see. What is not lagging. So I have a weird thing here that I haven't seen before. I don't get it. I'm plugged into my Ethernet. I have a long ass Ethernet cable going right to the modem, and this thing is telling me connection is unstable. Oh, dude, that's awful. What is the deal? Oh no, I look terrible. I'm looking at my phone now. This sucks. Well, this sucks. I don't know why. I shouldn't be on Wi-Fi. I don't understand what the deal is. I'm plugged into the router, and that sucks, everybody. I apologize for that. I don't know if there's something going on with my Xfinity, which is a stock I just bought, which was Comcast. But yeah, that sucks, man. Yep. Okay. Well, I don't know. Maybe I'll end this soon then, because I don't know what the deal is with that. Why? Yeah, see, now I look okay. I don't know. Something's going on with the thing because I'm plugged into the freaking modem, so it shouldn't be doing that. Oh, well, I don't know. We'll figure these things out. You got to love it. Yeah, see, now it's coming on. Yeah, Chicago, talking Chicagoan. That's kind of how I talk. I mean, I play it up, but UGI and PG. Yeah, I just bought I'll have it smashing their yields together. I just bought more Procter Gamble, looking to add more. Oh, wow. The old JMP is from Ghana. That's a haul. Holy cow. Ghana. Interesting. So you were born there, I'm assuming, maybe? There we go. Sorry, I see Caitlin. Trying to get 100 shares of Intel to move to Cisco. I did that. I think these companies will eventually be okay, but it's kind of dark days right now. There you go, Caitlin. AOS is a choppy div history because it does stock splits. Try to keep the stock price in double digits. Ah, interesting. 2-to-1 or 3-to-2 splits. Yeah. Interesting. Thank you. Yeah, because it showed 28 years of dividend growth. I think it was A.O. Smith, right? and they were. I didn't know if they had a spin-off or what. They must have. What did they do? Somewhere around 06 to 08, it looked like, I don't know, maybe that was the splits. Could be. No problem. It was really funny. All right, good. I'm glad you got a kick out of it. Like I said, my offensiveness comes from a place of warmth and loving for you people. So it doesn't come from a place of regret or fear or doubt. It comes from a place of love and kindness. And yeah, let's see. Credit Suisse. I heard something about Credit Suisse that they were going to be pulling out of the U.S. I think. Was that verified? The last I heard, it was a rumor, and I think they had denied it, but they were closing down. Anyway, I know that Schwab is removing Credit Suisse from their equity research reports, I believe. Yeah, we're just getting to this. See, this is the problem. I need to get caught up. Yeah, my cat. 1 penny at a time. There it is. This is Harris's podcast, 1 penny at a time. Definitely check it out. And I'm going laggy again. I'm going to call up and complain to old Xfinity. This is, Schweinchen, little pig. Okay, the capitalist pig. This is why I love you people. I love you people. Thank you. Nutty. Lunatic. Capitalist piggy. I love it, man. I get it. Yeah, I think most of us will get the irony in that from the land of Germany. Do you listen to Rammstein in Germany? I'd love to know. The only other word I know in German is Das Krankenhaus, the hospital. I remember that from we were teaching our kids German as when we were young. No, we were young teaching our kids. We weren't kids teaching our kids. Here we go. DE. So deer versus cat. I haven't really torn into both, but I believe they will always do it. Okay, so I'm in the trades and I job sites and things. I always see deer tractors and cat tractors and wreckers and all that heavy equipment. Plus deer, I think, has more exposure to farmland, right? Let's see. Good point, Mike. So let me go and jump on old Simply Safe. And we'll just see what the dividend score is on those really quick. So come with us, everybody. Don't go away. Come on, check these two out. Hopefully this stupid thing holds. I don't know what I'm trying to say. Whoop. Yep. Whoa. All right, what were we doing? We were doing deer. So deer gets a dividend safety score of 83. Let's see their growth. 7.6%. 11% 20-year CAGR, not bad. Only 1 year of dividend growth. Look at that. They went flat there for a while. Yeah, they were flat. So they've been raising it a little bit here. Nice. Looks like COVID times they stopped growing the dividend. And timeliness. Their dividend yield is 15% below the 5-year average. That doesn't really get me excited. They're toward the lower end of their 52-week range. Let me see their free cash flow payout ratio. Eek. 205%. Now, I don't know if they had some crazy one-off charge or if any of you know, Casey might know real quick why they have such a high free cash flow payout ratio. Their free cash flow per share is only $2.08. So that's not very good. I would be a little bit nervous on that. That looks like they can cover the interest on the debt, though. And Cat gets a 93. Let's see, 10% 20-year CAGR, 29 years of uninterrupted, 28 years of dividend growth. And yeah, it looks like they stopped. Well, that's weird. They didn't get hit with the, I guess they must have just raised it in time to maintain that dividend growth streak, I'm guessing. I think. November 19th, February. Interesting. Sorry, I'm learning and reading here with you guys. 20%, their current yield 20% above the 5-year average. And let me look at a few. Let's see, their free cash flow payout ratio 80%. But look at that. In 2012, it was 1,200%. So I'm assuming that Deere will eventually revert to the mean. Sales growth come down a little bit, but still 18%. And let's see there. Not bad. Not bad. 18. They can cover the interest on their debt. Net debt is not too bad at all. So I would definitely be going with Caterpillar over Deere from what I can see in this quick, I don't know, 5 seconds, 5 minute. Right. Okay. Let's see. Looks fine on his end. Okay, good. Yeah, I don't know what's going on. Xfinity. Dude, so that's one of the things, a little bit of a sneak peek on the next video I'm doing is I'm ruining it for you guys. Dang it. I'm going to save it. I'm not going to say everything. Yeah. Zal, he loves them trotting. Yeah, you know what? Like the wife and I just love going in the city, seeing new things, new people, walking around. Beautiful day. Beautiful day. It's a beautiful day. Da-da-da-da. I don't even like U2. Xfinity sucks. I was in Maryland for a couple of weeks and the internet was bad. Yeah, usually it's not that big of a deal, but I don't know. This is the first time I've seen that. Oh, dude, here we go. We just got spam botted. Dude, I got to catch up here. All right. You got it. Antonio, I don't know what kindergarten means, but did I say something? Okay, cool. I remember I was in kindergarten in 1983. I think, yeah. Or was it 84? Anyway, let's see. Yeah, AOS there wasn't a spinoff. Their div share went from 21 to 14. Ah, okay. It's because of a stock split. Interesting to know. Dude, I love it. She's like our researcher here around Dapper Dividends. We're going to have to start funneling some of our small little dividend money to or dividend money. What do I call? I'm sorry. I'm looking at me. I'm looking at the Wi-Fi mamma jamma here. And let's see. Income. I can't think of the name of it. The brain fog is real, people. Don't drink too much alcohol. So investors went from owning 2 shares of AOS for 42 cents in combined dividends to owning 3 shares for a combined of 42. Yeah, so exactly. When companies do stock splits, nothing changes. The best way to describe it is it can also be a reverse split, but kind of like what, who was the recent one? Like, well, I know Tesla, Google, Apple, they all did it, but it's basically the piece of the pie, the pizza pie. Who you guys on the East Coast are nut jobs. You call it a pie. Nobody here calls it pie or za. It's pizza. We get pizza. So if you have a pizza and it's cut into, I don't know, 4 pieces, and then you cut it into 8 pieces, but it's still the same amount of pizza. The pizza doesn't change. Za. You guys are lunatics. Get out of here with your za and your pie. There, let's see. So again, thank you, Caitlin, for sharing that. We love it. DE and CAT function is similar, but different industries. Both are clearly, yeah, I've never really tore into John Deere. Honestly, that may be the most I've looked at them. Blue collar work vehicles, CAT's more construction, and DE. By the way, those of you that just tuned in, what's up? I talked at the beginning. So the way I structure these live streams is I'm trying to make it replay friendly for people that are coming 2 weeks from now to watch. I want to just do the info that I want to spit at you and just put it right at the beginning, just jump right into it. And then we have the shenanigans and hijinks and lunatics here. But anyway, CAT is more construction and DE is more agriculture. Yeah, I definitely would buy that. But I do see Deere equipment every so often on construction sites. My pronunciation is great. Listen to Rammstein. Yeah, interesting. They are a fun show. If you haven't, just watch some of their live stuff on YouTube. Yeah, you got to run. Yeah, dude, I'm going to run soon too here. I love it. This is what I was saying. I got hit with the spam botting. Can I block this? I think I can remove this. Here, block user. I don't know what will happen if they all go away. All right, cool. Block that. Let's see. For Aaron, PG or Starbucks? So it depends on what you're going after. They're not exactly, apples to apples, kind of apples to oranges or bacon to ham. Wait, bacon is ham, isn't it? Not a big meat eater, but I should know that. That seems pretty elementary. And I don't know a better analogy. It's pen and paper. Here, it's a pen and paper. So pen writes on paper. You use them in conjunction, but we're done with these stupid analogies here. Anyway, I would probably say if you want to sleep well at night, Procter Gamble. But if you want a little bit more upside and a little bit more growth, I would go Starbucks. They got a lot of things in the works. I don't know if you saw any of their Investor Day presentation stuff. Dude, what was that all about? Did you hear how my S's changed? All of a sudden, he started saying S's like Sean Connery here. What's the deal with this guy? Sean Connery. I can't. Anyway, Scottish accents are not my thing. Here in the world of Dapper Dividends, we do accents, but they're not always the best. But you get to know and love this guy right here. Yeah, Starbucks all day. Got a little dizzy on that one. Anyway, all right. Yeah, Starbucks all day. Yeah, it's preferential. I think they're both safe. You can't go wrong with either one, but I think Starbucks is just a little bit more risky, but I think has a lot more room to grow. There he is. Okay, everybody, goodbye, Zal. Thank you for stopping by, man. Appreciate it. We should watch Caitlin. I'm telling you, dude, we've talked about it. She just loves doing the comments, and I don't blame her. So fair value for ADM. I don't try to think how I could do this quick. Let's see here. So I'm going to just talk to you guys while I do this. What was that? Alpha spread, right? Alpha spread has an intrinsic value calculator. Here, let me pop this on the screen if we're doing this right. Okay, here, I'm going to share this with you guys. I think you get 5 a day for, oh, I can't get that. Here, I think I do Chrome tab. There we go. Share. So you get 5 of these a day with, what did you ask for? AMD? Let me see. ADM, not AMD. Archer Daniels Midland. Let's see what they say here. ADM. Please work. Okay, so Alpha Spread, interesting company. They only give you a little bit of stuff here, but they give a score of $94.59. Let me make this bigger. Those of you who don't have your spectaculars on. They say it's undervalued by about 15%. I don't see the cost right now. But yeah, I do own Archer Daniels Midland. And they, here, current market, $80.62. They say $94.59. So there you go. Alphaspread.com is where you can go. You don't have to sign up or anything. And they let you do, I think I said 5 a day. And then they block you. Unless maybe you go private, then you can check that out. So, and then ADM gets a dividend safety score. Oh, let's see. I'm not going to put it. I'll just tell you. 94, very safe. But their dividend yield is below their 5-year average. Here we go. I love Caitlin. Thank you. With Deere, the free cash flow in the trailing has been cannibalized by a massive build in working capital. It should unwind into free cash flow over future quarters, but it depends on how much inventory has to be discounted. Yeah, this is all something that I'm still learning about. I'm not as proficient as Casey is. So, dude, I love this. I love it. She helps us learn the community. You know, we can all help each other be better investors. I love it. I certainly don't know everything clearly, and I'm learning, improving. The aggregate return of marginal gains is what I'm doing 1% better each and every day. But then after 100 days, wouldn't you be 100% better and max out? I don't know. So very cool. Thank you for sharing that, Casey. The dividend is well covered, but the generally accepted accounting principles, right? Did I get that right? I hope I did. Makes it look ludicrously high compared to free cash flow right now. Yeah, like I said, a lot of these third-party sites, you always have to do your own little bit of due diligence, take it with a grain of salt, and chat your – sorry, I'm reading the thing I was blocked. I blocked the chat 69XYZ. Again, Casey, thank you. Das Kapitalisten Schweinchen. Yes, strudel. I want some strudel. I don't really eat sweets. Who wants to get some strudel? Well, I'll do a virtual strudel eating. He's an IIPR. What the hell is that? I don't know. This guy just, I'm filling time. I'm filling time. Look at me go. Who's he talking to on screen? I'm going to do the whole podcast like this. Hi, I'm Russ with Dapper Dividends. Thanks for tuning into the channel. People will be like, doesn't he know the camera's the other way? Anyway, yeah, somebody just dropped out there like, I've had enough of this. So IIPR, I think they're going to be good in the long term. It's risky for sure. All the whole cannabis sector is down. They've had some of their tenants, which King Knight, I don't remember, King something, I think. I can't remember all these names. One of their largest tenants, which I think accounted for about 10%, right, of their revenue, defaulted on their rent. So I think even if they lose a tenant, they're going to find other operators to bring in. I think they're going to be okay over the long time. I think from what I've seen, they have really good management, and you kind of need that to navigate these troubled times. But I think as the cannabis continues to grow and pushes toward legalization here in the United States, I just think they're going to be okay. And I wouldn't go hog wild, but just do understand it is a little bit risky and we just don't know. But you could be rewarded for that risk. So if you're okay, my recommendation would be that if you are invested in something like IIPR, I would probably be cautiously optimistic and expect a cut. Hope that one doesn't happen. But if one did, would you be okay? You don't want to, have a ton of your capital in them. Yeah, see, I'm lagging again. It looks terrible on my end. Stupid Xfinity. I'm not on Wi-Fi. I'm plugged in. It's right here. All right. How do you feel about REITs considering the trend of more rate hikes? So REITs probably are going to suffer. So from what I've read and what I've seen, and I'm sure Casey knows a lot about this, but REITs operate with a lot of debt. So companies that are really debt intensive like that, then rising interest rate environments are going to be harder for them to acquire new properties because they're going to have to pay more for that debt, right? So this is why companies like Realty Income and the whole REIT space is really starting to trend downward big. It's just harder for them to be more profitable. Their margins are going to get a little bit compressed, I think. And also, because we have the rates rising, that's also going to suck money. That's going to suck investment dollars away because equities are risky. All equities are risky. Even Procter Gamble is inherently risky. Something crazy could happen and they could go out of business overnight. I mean, the odds of that are so small, but it still is a risk. But when you are buying like treasuries, then the government is not going to go out of business. And if the government goes away, well, we got really big problems to worry about. So it's a give and take. And I think if you do Freedom Stacker, why, buddy? Why? What do you want to see, Chair? Hold on. Yeah, so just know that when rates are rising, when people put money into like REITs and stuff like that, it's going to be harder for them because now they're also competing with treasury bills. So their margins are going to compress and they're going to have competition from safer investments like treasuries. So yeah, I'd expect them to keep going down a little bit. Again, buddy, I mean, I don't know what to say, but thank you. I don't know. I got to do something. I need a bell or something, or we'll change the lights for you. We'll go to red lights, bring in the red light district here. Yeah, thank you, man. I mean, but thank you. I miss it? I don't remember your name. Please share it. Your YouTube channel. Put the link in the notes. I'll put it up here again, man. That is just too kind of you, but like invest it in yourself. Buy yourself some more silver. You don't need to keep giving it to some schlub like me. If you feel you absolutely have to, man, I'll take it. And we thank you for it. And it does go into the channel, like investing in, God bless it, this chat 69. It does go into things like Simply Save dividends. I love sharing that. It is, I think, $399 a year. So a chunk of my YouTube money goes into that. And I like sharing that information. I think they are good, and it's a little bit expensive for some people. So yeah, God bless it. I got to block them again. All right. What else we got here? A couple more. We're going to wrap up here in about 5 minutes. And Kevin, what up, buddy? You're going to buy XOM. I think they're going to be around for a while. I think, I like nuclear, like thinking like decades in advance, but oil's going to be with us for a while. I think they're going to be okay. Thank you. Caitlin, King's Garden defaulted. They agreed to a confidential settlement agreement recently, so they'll be getting some of that funds from operations back. That's good to hear. Like I said, I think they have a solid management team, and they're going to, you want a good captain on the ship. Believe me. That's annoying. You guys didn't have to hear that. And then total black box on how agreement was structured through. Okay, interesting. That'd be curious to know exactly what that was, right? Here we go. Now I don't have to call you Freedom Stacker. I can say Jason from the Freedom Stacker channel. Yeah, thank you, man. Jason, thank you. I really do appreciate that. I really, really do. And here we go. Hey, it's speaking of names, it's okay. This is a guy that's been for us a while. G-Man is I'm sorry, bud. I completely blanked on your name. He's been with the channel for a while and the podcast. I do love it. Tell me your name. I'll put it up there. Think about Bayer. Their problems. My guys from Dividend Talk, Gary, G-Man, duh. I knew it was something like that. The Dividend Talk guys, I think they don't like it, but if I remember right, European dividend growth investor keeps them in his portfolio to remind himself of like one of the mistakes he made holding on to a company. But yeah, I think they've got issues. I've honestly never really dug into them that much, but I know they have problems with that. And great chat. Thanks for all the contribution. REITs look cheap, but as you say, trending down. Yeah, and I think it's fine. Like I'm looking to add, I'm holding off buying more realty income, hoping it gets to the low 50s. If we have a sustained bear market and the rates keep going up. But I think over the long term, these are really great buying opportunities, but we do have to keep in mind and expect that they're just going to be down for a while, I think, until the Fed really pivots and starts bringing this is driving me crazy with this stupid. I don't know why I'm on Wi-Fi here. I have a weak connection. Ugh. All right. So that's it, guys. I love it. Again, apologies for I hope it wasn't that way throughout the whole thing. I don't know. Oh, here we go. Perfect. Great to have you on. Very apropos that this is one of our viewers in Germany, and he wouldn't recommend Bayer, which I know they are obviously German, right? They better be. I don't want to give false information. So, yeah, yours truly is going to look into why my connection is unstable and I'm not on Wi-Fi. And I guess it's Xfinity. We'll blame it on Xfinity, which is owned by Comcast, ticker CMCSA. And keep on the lookout. My next video that's going to be coming out, depending on what my work week looks like, hopefully by like Wednesday morning, will be on. I sold Warner Brothers Discovery in the taxable account, whatever shares I had. I just took the hit. Going to tax loss harvest those. I sold those. And then I'm going to tell you what I bought instead. So thanks for bearing with the really poor quality of this. Yeah, Steve, I should be short Comcast after this nonsense. Let's see. Last one. I hope you're born in 78, man. If so, what's up? I was born in 78. What REITs will be outperforming medical like Sabra, OHI, or mixed REITs? Funny, I did a video on OHI, told you why I sold OHI. And honestly, like medical stuff, I'm a little bit worried about because of the Inflation Reduction Act. They're allowing Medicare and Medicaid. The government, AKA, is going to be negotiating with they're going to be able to negotiate with drug prices. And I believe that's also going to filter down to what, I know a substantial portion, I want to say substantial portion of like OHI's tenants receive Medicare and Medicaid dollars. So if they're getting less, then they're going to not be able to pay. And OHI is not going to be able to have those rent increases. So they can try to step up their rent increases, but if their tenants can't pay it, then you know what? So be it. That's going to be harder. And yeah, I'm not a big fan of the medical space right now, other than like Johnson and Johnson. But even then, they have pharmaceutical. They're going to become a predominantly pharmaceutical company after they spin off the consumer health segment. So again, everybody, thank you. Casey, Caitlin, Kate, I really do appreciate you stopping by and sharing your thoughts on this awful friggin' live stream. I got to get off on this. I'm not getting off on this. I'm getting off. I don't know why it's doing this. So this is terrible. Thank you, everybody, for struggling through this with me, and I do appreciate it. So I will see you in the next video, and so